everybody, welcome to today's fundamentals. Hello Fedra.
Hello.
What's up in the FX market?
Well, the euro is moving in an upwards trajectory, the pound is also moving in an upwards trajectory, and the Aussie. Now, what these three have in common, in addition to the the euro against the Canadian dollar, the greenback against the Canadian dollar, have all been moving in an upwards trajectory. Now, what these have in common is that despite moving in an upwards fashion, it appears that the rate at which they have been increasing appears to have been mitigated following yesterday's Fed interest rate decision. So when we're saying mitigated, we're meaning that it's still moving slightly upwards, yet the movement is minimal. It's not too significant, and as such, still upwards, yet it appears that they may be staying at their current levels for now.
Mm-hmm.
Well, current levels temporarily until the ECB's interest rate decision or more fundamental news impacting the dollar.
Mm-hmm.
However, the reason behind this is that the Fed's interest rate decision yesterday, in which the Fed paused their interest rates, so they did not hike and remained at current levels. Now, this was widely anticipated, with the markets yesterday implying a 91% probability, as we had noted. However, what was interesting was the forward, quote-unquote, guidance given by the Fed, in which they stated that more interest rates are due to come, so the median target rate was increased by 0.5%, hence implying the potential for 2 more rate hikes by 25 basis points each, or one by 50 basis points. So essentially, the Fed is saying that we're remaining on pause for now, yet in the future we're going to continue hiking interest rates, and that interest rate cuts are nowhere near in sight. So prior to these comments, the markets had anticipated an interest rate cut by as early as September, yet that now appears to have been pushed to January, hinting that the greenback in the long run may gain some further support, despite slightly weakening during today's trading session.
Mm-hmm.
Now, the dollar against the yen is a different story. The dollar against the yen has been moving higher. So this may be interpreted as yen weakness, as in tomorrow's Asian session, the Bank of Japan is widely expected to remain on hold with their interest rates, hence weakening the Japanese yen and allowing the greenback to capitalize on a weaker yen and on some strength from the forward hawkish guidance by the Fed yesterday. Now, the dollar against the Turkish lira has halted at the $23.65 mark.
Mm-hmm.
As we've stated yesterday, that now appears to be a hard ceiling at which the greenback will not push higher than the Turkish lira, despite gaining some strength. It appears that it's staying put for now. So we're anticipating the potential of a breaking above the $23.65 mark. However, we may see that the market has lost all that momentum that was gained leading up to the elections and following the elections where President Erdogan was re-elected and maintains his unorthodox economic policy. Hence, it would be interesting to monitor the pair as new developments come in. Perhaps we may see the Turkish lira strengthening after the summer months, but that will be determined based on a number of factors.
Mm-hmm. And how has gold's price been reacting?
Well, gold's price has been moving in a downwards fashion. Now, we stated yesterday that gold may have been able to capitalize on a weaker greenback. Yet it appears that with the Fed's intentions to create a quote-unquote soft landing,
mm-hmm.
it may appear that the worries of a recession in the imminent future are being pushed back. So essentially, they're saying that, we're going to be increasing interest rates, yet we're just going to be at a gradual pace.
Mm-hmm.
So we're going to try and avoid a recession in the US economy.
Mm-hmm.
So given gold's relationship as a hedge during times of financial instability, it appears that these comments by the Fed chair may have eased market worries, thus pushing gold's price lower.
Mm-hmm. And how about US stock markets?
Well, the Nasdaq appears to have remained between yesterday's opening and closing figure. So it could be said that it's moving in a sideways fashion, yet the Dow Jones 30 and the S&P 500 have been moving in a downwards trajectory. Now, we stated yesterday that this may imply that the AI hype the support may be waning, so less support in the market, perhaps All three major indices may be due for a market correction lower, which will be interesting to monitor during today's session. In addition to Google being fined, well, not fined, been taken to court by the EU's competition authorities, claiming that their AdX advertisement exchange has been, in a sense, created a monopoly for Google to take advantage, hence hindering competition in the EU. And should Google be found guilty of these accusations, they may be forced to split up their ad revenue business in the Eurozone, which could hinder the company's profits and perhaps their stock price in the long run.
And how about oil prices?
Oil prices have been down. Oil prices are predominantly, I'd say, being affected by demand worries in the future. So, worsening demand may imply a weakening in oil price. However, following yesterday's Fed's interest rate decision, we have to note that they did gain slightly.
And what's in today's calendar?
Well, in today's calendar, we note the ECB's interest rate decision, yet traders may be paying more attention to ECB President Christine Lagarde's press conference. Why? Well, following the Fed's interest rate decision yesterday, it is very likely that the ECB president may face a question from news reporters as to how the ECB will proceed in the future following the Fed's decision yesterday. And as such, should the ECB president provide a more hawkish forward guidance, it may support the common currency, whereas should the ECB president present a more dovish outlook, it may weaken the euro. However, we should note that the Eurozone and Germany are in a technical recession. Hence, should they overhike, it may weaken the common currency in the long run, as more countries may join the Eurozone and Germany in a technical recession, whereas a more dovish outlook could weaken the currency nonetheless. And we also highlight the Bank of Japan's interest rate decision tomorrow, which the bank is widely anticipated to remain on hold, and as such, traders may place more emphasis on BOJ Governor's Ueda press conference following the interest rate decision and the government's economic policy, where it might underscore the BOJ's intentions to maintain their ultra-loose monetary policy, and as such, may provide some support for the Japanese yen should it contain significant, strong language that hints the government's heavy desire to drop the ultra-loose monetary policy. However, we must note that is very unlikely to happen.
Great. Thank you, Fedor, for your time, and everyone for watching. Join us after a short break for technical analysis with Fedros.
Hello, everybody, and welcome to another technical analysis. So let's start off with the US dollar index. As you can see, it moved lower in yesterday's trading session, yet appears to have gained some strength today, yet this is minimal. So it's approximately nothing, insignificant. So let's move on to the euro. Now, as you can see, yesterday we placed our support and resistance support and resistance lines, not trend lines. So it's broken above R1. Notice how it's been touching R1, validating as a resistance, which has now turned support. Broken above, moved over to the mid-range, if I'm not mistaken, precisely touching on our upwards moving trend line before moving higher. So now we're just going to be switching R1, which becomes S1, and it's moving in an upwards projection as markets are anticipating the ECB's interest rate decision today, where it is widely expected that the bank will hike by 25 basis points. So as we've said in the fundamentals, it will most likely play on how ECB President Christine Lagarde speaks during the press conference. When the question about the Fed's pause is asked, the way she answers will most likely influence markets heavily. However, that is not a certain, it's not a given. So It will be interesting to keep an eye out for the ECB's president's speech following the interest rate decision. I would not be surprised if the bank says that they will continue hiking interest rates and that inflationary pressures are persistent in the Eurozone. Yet, if they overdo it with the interest rates, then we may see a weakening of the Eurozone as a whole, which in the long run may weaken the common currency. So we've got S1, S2, S3. So it's resistance turns support. Hence, we're maintaining our bullish outlook as it continues to validate both our upwards moving trend lines. Now, I'm seeing a channel being formed as well, which we're going to be noting in just a minute. So support and resistance, S1, S2, and S3. Now, let's move on to resistance. So we've currently got resistance at 1.0910. Now, the difference between S1 and R1 is 109 pips. Now, this is not bad. This is still a valid resistance level. It allows us for movement between S1 and S2. However, it appears that it might be too big. So had I placed R3 higher, it would most likely come at around the 110,806 level. Yet I think I would bring R1 lower at 1.086860. So this would be R1. So we're bringing R2 slightly lower to accommodate this sort of this resistance barrier, I would say. And then we would adjust and bring R2 perhaps at the previous level as it was before. Slightly too close to R1, so we'd bring resistance higher. So I'm placing my R2 in the midway point slightly between R1 and R3. Why? Well, as you can see, bodies of the candles being touched. So we're going to be placing resistance 2 at 1.0930. Slight correction. And we're going to be bringing R1 to 1.0860. Now, even if the pair is moving in an upwards direction, the ECB's interest rates could potentially swing the pair in either direction. So it could either support the pair currently and go higher, or it could reverse course, break below S1 and move towards S2. Why? Well, should the bank decide to pause, which would be a big surprise in the market, then we may see the common currency weakening against the US dollar, hence breaking below S1, and the next target for the bears being S2. However, for our bullish outlook to continue, we would like to see a clear break above R1 with the move towards R2. So this is our support and resistance for the pair. We could extend our upwards moving trend line. As long as it validates our upwards moving trend line, we maintain a bullish outlook for the pair. Now moving on to the pound. No substantial reason for us to change our support and resistance lines. It's broken above S1. It's made the break above R1, yet fell slightly below, perhaps moving in a sideways fashion, gaining momentum and breaking above R1, with the next potential target for the bulls being R2. So we're maintaining a bullish outlook for the pair as it continues to validate our upwards moving trend lines. So let's just extend upwards moving trend line from here. For the euro, let's actually put in our our upwards moving channel as well. So it's moving in a sideways, it's moving, sorry, in an upwards fashion, and we formed an upwards moving channel. So should it stay within the channel and validate our upwards moving trend line and fail to break below S1, maintain a bullish outlook. Moving on to the pound, it appears that it's moving in an upwards fashion. The RSI indicator is near 70 nonetheless, applying a bullish sentiment within the market. For our bullish outlook to continue, it would have to break above our 1, with the next potential target being our 2 at 1.2770. So I'm not going to be changing my support and resistance lines yet. We might, they'd probably stay the same because it's been validated. It's currently testing resistance at R1. So we maintain support and resistance levels the same. Now, note the difference between the euro on the daily. It's higher. I'd say it's at the closing figure of yesterday. So slightly unchanged, but still in an upwards fashion. The difference is against the Japanese yen. So the interest rate decision of the BOJ is due tomorrow, with the bank widely expected to remain at minus 0.10. Yet what would be interesting is the the government's economic policy. Despite it being fiscal policy and not directly impacting the bank, we cannot ignore the fact that if the government shows signs of a strong willingness, or at least an attempt to pressure the bank to drop its ultra loose monetary policy, you may see the yen gaining. Now, note R1 and R2 are pretty close to each other. It has not reached R3. It's breaking above, so we're maintaining a bullish outlook for the pair. It broke above our downwards moving trend line, and it's still validating our upwards moving trend line as well. Hence, we would maintain a bullish outlook for the pair, and this will be resistance now turn support. I'm going to be removing prior R1. Note how it's aligning with previous hypothesis. So this would be S1. We could even bring S2. S2 at that point would be slightly too close to S1. So I'm going to be keeping S3 at 137.65. So this will be our S3. Now, why are we placing our S3 at that level? Well, in just a moment, I'll show you why. So we're placing S3 at this level because it's being validated once as a peak, twice here and here. So it's been validated on 3 occasions. We're keeping our S2 at this level, and we're switching resistance now turn support. So let's go ahead and place in S2 as well. S2 is at 139.15. So this would be S2. And S1 would be at the 140.75 level. So this would be S1, S2, and S3. And now we're going to be looking to place our resistance levels. So resistance 1 at 142.10. That's R1. R2, that could be R3. We're looking for the bodies of the candles. Could even be placed up here, yet that may be slightly too high. And a midway point could be around, so this could be R2, with R3 being brought slightly lower, broke above and moved higher, failed to break below, moved slightly higher before breaking down. So currently we have S1 at 140.75, S3 at 139.15, S2, sorry, S3 at 137.65. So we're now going to be placing R1. R1 at 142.10. R2 at 143.85. Now, I won't be forming an upward trend line. Why? Even this is a major move. So even if I did draw an upward trend line, which I'll show in just a minute, it would be too narrow for my own liking. So even if I did draw an upward trend line, it's too narrow, it's too steep, and it's already been broken. So not really much of a point there. However, I would extend my slightly upwards moving trend line. Note that the widening of the Bollinger Bands imply high market volatility. And we're going to be placing our R3 at 145.50. Personally, for tomorrow's Asian session, I'd pay more attention to the governor's statements after the meeting and to the government's economic policy that is due to be released alongside the BOJ's interest rate decision. I think those two may provide more insight as to the pair's direction. So perhaps an extreme case of abandoning its ultra loose monetary policy, which is highly unlikely. Yet I do expect to see the government pushing the bank to perhaps consider to switch. Now, by considering, it might be easing the markets for a long period of gradually shifting policy. I do not expect it will happen overnight, as it would create high market volatility, and the ECB has already warned that it could have catastrophic consequences on the bond markets should they switch from their ultra loose monetary policy. So, dollar against the Swiss franc is testing, it's broken below support at S1 at 0.9020. However, for this to switch, I would need to see the candle, so the 4-hour candle, finishing and breaking clearly below S1. So I'm going to keep this as it is for now. And note that the narrowing of the Bollinger Bands imply low market volatility, so it could move in a sideways fashion. The Aussie is moving in an upwards fashion. It's continuing its ascent. Now, note that it's broken above R1, found some support at R1, and is now moving higher once again. And it appears to be moving in a sideways channel. Look at the Bollinger Bands, they've narrowed, so low market volatility, but they're moving in an upwards fashion, not in a sideways. So one could even place a sideways, an upwards moving channel. Yes, it's very narrow. However, if the price action continues in its upwards trajectory, I would not be surprised if it breaks above R2. So once again, we're going to be switching our resistance now to support. S1 now becomes S2 at 0.6690. S2 becomes S3. R2 becomes R1. R3 becomes R2. We're deleting our prior support and resistance lines. Keep the chart tidy. And now we're going to be looking for R3. Once again, we're looking for candles which have bodies. So this too close to R2. At this point, at the 0.7025 level is my R3. Yet it might be a bit too close, and it is too close to R2. So we're going to be bringing our R3 higher. Here. Resistance before making a major move lower, validated again and again, move higher, failed to break, moved slightly lower. So my R3 would be at 0.704, 0.7040. Zero. R2 is 0.6975. Moving in an upwards fashion, upwards moving channel, trend line as well. Break above resistance now turns support. So we're maintaining a bullish outlook, and supporting our case is the RSI indicator near 70, implying a bullish market sentiment. Now with gold, as you can see, it's broken below support, now turned resistance. So just look at how the open and close of these two candles, so the closing of the bullish and the open of the bearish candle, is right on S1 at 1938. It's broken below our upwards moving trend line, therefore we maintain a bearish outlook for gold. So once again, we're going to be switching S1 to R1, resistance now turned support, now turned resistance. R2 at 1955. R3 at 1975. So we're going to be looking for our new S3. So for our bearish outlook to continue, we'd like to see a clear break below S1 at 1910, followed by a move towards S2 at 1885. and we're looking for S3. Previous high. So RS3 will be at the 1856 level. We maintain a bearish outlook for gold, given that it's broken below our upwards moving trend line, and it's broken below support, now turned resistance at 1938. So we're going to be placing S3 at the 1856 level. So we're maintaining a bearish outlook as long as the price action remains below R1 and moves towards S1, if not breaking S1, with the next potential target for the bearish being S2. Whereas for a bullish outlook, it would need to break above R1 and break above R2 for a bullish outlook to emerge. However, it's below the RSI reading of 50, implying a bearish market sentiment. Now, lastly, we're going to be looking at Google. So Google is being sued by the EU's competition authority. They're essentially claiming that they have a monopoly on advertisements in the Eurozone. Why? Because they've been feeding information to their ADX um, marketing, marketing website program, essentially, upon which people can bid for ads, and they've been telling them the lowest bid and the highest for them to essentially win the quote unquote contracts. So they're saying that they've been stifling competition, and if they're found guilty, they may be forced to break up their ad revenue business in the Eurozone. So, based on that, I would personally maintain a bearish outlook for Google. So, we might see the formation of a downwards moving trend line. S1 at 121.60. S2 at 116.40. And I would bring S3 right around 108.50. Yet this might be slightly too far. And R1 could be brought potentially at the $123.95 mark. R2 at the $127.65 mark, previous swing high. And lastly, let's find R3. Stock split here. Hence, personally, I would bring R3 at the $130 mark, big figure, or 131. 131 might be to have some consistency between R1, R2, and R3. And this would be my R3. So we maintain a bearish outlook for Google, given the current claims by the EU Competition Authority that they've been violating and using their services as a monopoly, hence hindering competition. And as such, despite running along the figure 50, I would not be surprised if it breaks below S1 and moves towards S2, validating our downwards moving trend line. That's it for today. Thank you, and until next time.
Hello everybody, welcome to today's Fundamental and welcome to another informative video. In today's video, we'll be looking at earnings per share. Earnings per share, or EPS, is a financial measure that calculates the profitability of a company. It does this by dividing a company's profit by the number of its outstanding shares. EPS is very important to traders because it indicates how much a company earns for each of its shares. Investors also typically pay more for shares if they think the company has higher profits relative to the price of those shares. While as a CFDs trader, you won't actually trade the real share, but contract for difference on shares, it is important to be aware of company earnings and how well a company is doing, so you can trade CFDs on shares confidently. A company is generally considered to be more profitable the higher its EPS. Two different formulas are usually used to calculate EPS. The first formula is to take the company's income after tax and divide it by its total number of outstanding shares. The second formula is called the weighted earnings per share. Here, an investor would take the company's net income after tax, subtract total dividends, and divide this number by the total sum of outstanding shares. Also, investors will use EPS to measure a company's PE ratio, further helping them to identify the value of a company and its shares. Although a useful metric for traders, EPS is only meaningful if compared against other competitor companies operating in the same sector. If you're trading CFDs on shares, as always, be mindful of the risk that comes with trading. Do your research and be cautious to minimize your losses. Thank you for watching.
Okay. All right. Okay, I see a few of you guys have already started joining, so let's give it a moment for the others to join first before we begin. So yeah, let's wait a minute or so. So I actually have turned on the webinar chat. So it would be better for you guys to talk in the webinar chat other than the question and answer. Because if you talk in the question and answer, nobody else can see your questions. Then I have to, speak it out or copy your question into the chat. So hello there. Can you guys hear me? Can you guys hear me doing a mic test? I've turned on the chat. All right. Hey, hi there. Hi. Okay, that's great, Marius. Hey, thanks, Vinicius, Sylvia. Okay, I'll give it another 30 seconds or so. We'll let everyone join first so they won't miss out. So yeah, by the way, where are you guys from? So yeah, for me, I'm actually from Singapore. I'm actually in Asia. So at the moment, it's very, very close to dinner time. It's already 6 p.m. at my time. Oh, nice. Portugal. Where is that? Let me see how far is it. Okay, it's at the other side of the world. Wow, we are in Spain. Okay, I think it's the other half of the world. So yeah, I'm actually from Asia. Okay, how's everyone's week been doing? Has anyone traded this week so far or today? So today I actually avoided the London session. Price was very, very choppy within a consolidation. Okay. Let me get these out. Okay, so making some profit. What trade do you take? Do you mind if you share your trade? So I'm quite interested in how you guys trade. What kind of trades do you take, especially for today? Since you said you're making some profit, I'm interested to see which trade you actually entered. Because for me personally, just now I didn't see any proper setups. So by the way, there is the IronFX YouTube channel that you guys can actually subscribe to. So future webinars like this, which are recorded, should be uploaded or will be uploaded on the IronFX channel. You guys can actually go there and look for a recap. So if you want to find out more webinars like this, you can actually go to ironfx.com. So under IronFX School, you can actually go to webinars. So right here, you can actually register for our future webinars like this right now. So I send the link to the chat also. Okay, you actually got a Euro USD buy to 1.07670. Okay, let me see. I'm very, very interested, honestly. Let me see. I got to load my layouts. Euro dollar. So I actually also had a bias that euro dollar might continue going up. So I was actually looking for some and a ballpark area of 1.07, this specific area. 1.07800. So you are going towards 670. Okay, so I guess you are looking to clear out the previous swing high right there. So that's your nearest resistance. So currently resistance 1, that is the next resistance. So you can see very, very clearly 1 tap, 2 taps, 3 taps, 4 taps. Okay, roughly 4 taps there. Overlap resistance. So just looking at the daily, I actually wanted to take that buy to clear the upside, because if you noticed, very, very nice right here, we actually have some sort of market imbalance. There's an imbalance in the market right there. So likely we can possibly see your trade go right, hit there, and likely reverse back down. That could be a possible scenario, or price can continue moving bullish. So at this point of time, I will not be trading, not entering any trades. So do you mind if you share what number did you enter? I mean, what time do you enter? And what price did you enter? So in the meanwhile, so when I'm doing webinars, there are actually people who told me, wow, they want to contact me, want to ask me questions regarding the charts, regarding their trading. You can actually contact me here. You can actually click on that link. You can search everything about me. It's just a quick little short portfolio about myself. So feel free to check that link out. Give me a support if you want to. You can follow me. It's free. Okay, you entered at 1.07422. Let me take a look. 1.07422. Okay, that was a very, very nice entry. Why do I say so? Because if you look right here carefully, you actually only took the trade during the London session and when price broke out of this consolidation range. So not bad, you actually took a breakout trade. So you were up about roughly an estimated of 18 pips at the best earlier on. So right now you're floating at about 8 pips. Okay, because today, okay, you said that because today the Euro USD market is mostly bullish. Okay, well, do you actually incorporate any fundamentals to your trading? Hey, hi there, Wisdom, Ik Yang Wa. Just saw you joining. So yeah, actually I'm just looking at Vinicius Silvia's trade recap. A trade he actually entered right here. He actually was in a buy. And he's actually looking to take profit and clear the previous swing high there. So where's your stop loss? Is your stop loss, am I right to say that is somewhere here, your stop loss? Oh, you use 3 moving average. Nice, nice. Okay, well, it's actually very, very cool to see that you guys are actually using multiple trading strategies, incorporating it to your trading style. For me personally, I actually use smart money concepts. I do not use any indicators for my trading. So yeah, that was a very, very good entry. Good job, good job. Hey, hi there, J-Wu. Okay, stop loss at 1.07319. Wow, not bad, not bad. 319. So your stop loss is slightly right there. Okay, that's quite a reasonable stop loss. Okay, you are risking 10 pips. Hey, hi there, Diago Imbara Garigo. Okay, without further ado, let us begin the webinar first. So as you can see, you guys registered. What you guys register for is the Fibonacci series 4 out of 4 projections. Okay, so 4 out of 4 projections. I got to read the disclaimer first before I begin. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So this material is just the opinion of the author, which is myself, and the client's investments, objectives, and risk tolerance have not been considered. So IronFX is not responsible for any loss arising from any information contained. So redistribution of the material is strictly prohibited. Also, just to let you guys know, this webinar is recorded and will be uploaded in the future on YouTube or on IronFX LinkedIn channel. Okay, so Vinicius actually asked, okay, should you close or should you let it go? Well, this question is very, very subjective. You got to follow your own trading strategy. So since you are using the 3 moving average, you should use your confirmations, the idea invalidation. Is your idea still right? Or do you think it will go down? So this part is up to you, man. You got to handle the trade. That's the only way that you can learn from it. If you close early and then it eventually hits your take profit, there's something to learn too. Okay, let us begin. So, okay, my name is Chen Yongqing and I'm actually the investments analyst for Everest Fortune Group. So we are actually the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So just to let you guys know, today the webinar will be a shared webinar. So I'll be doing it together with Sarah, my colleague. So this is Sarah right here. So she'll be taking over for the first half of this webinar. Okay, let us begin. Okay, she will take over now. So later I'll come back, I'll take the other half of this webinar. Okay. I think okay. So if you want to, yeah, this is a PPT, then you want to over here is the minimize, then you can open Google Chrome. Okay.
Hi everyone, my name's Sarah. Okay, so today I'm going to be the first part of the Fibonacci retracement 4.4. Okay, before I starting, let's take a look at today's agenda and what we are going to learn and what I'm going to share with you guys. So firstly, we are going to have a recap on Fibonacci retracement essentials and what are the importance of the Fibonacci retracement. And secondly, the ideal market structure, which means under which situation is good for the Fibonacci retracement and which graph or which is not good, is not suitable for this Fibonacci retracement. Thirdly, we are looking at different Fibonacci retracement level, which means Fibonacci retracement, Fibonacci expansion, and also Fibonacci projection. Fourthly, we are looking at what are the Fibonacci projection, and lastly, what are the confluence level, which means what are the significant level we need to take note by. Okay, let's start with the first one. Before we are using Fibonacci retracement, always to check is it is it suitable to use this one as an indicator for us to find the support and resistance, or like is that a good thing? Is that the correct timing? So what are the essential steps that we are finding using Fibonacci retracement? Firstly, we must to make sure the market is clear enough. What's the meaning of market is clear enough? We are looking for the a big zigzags. Okay, it's a big moments. It's not like something like very small moments. We cannot see it. And secondly, we need to identify the recent trend. Okay, what is this means? Means we need to identify whether the whether the price is going up or going down. So thirdly, we need to identify the recent major swing low and swing high, which means the highest point and the lowest point. We always draw the line from the left to right, okay? So from the highest to lowest or the lowest to highest. Okay, so for this graph as an example, so you see this one is the, okay. So we draw the Fibonacci from the highest point, which is there, and to the lowest point, because it's a downtrend. Okay, what I mean by significant swings. Okay, so now let's take a look at what is called insignificant swing, which means the time we cannot use Fibonacci. What is insignificant mean is like the movements are too small and there are no significant swing high and swing lows. Okay, so you see this graph, the price movement are too small and there are no significant level, no very big movements of the price. Let's take a look at this as an example. So this one we are considering as insignificant lows. As you can see, the price is moving up, down, up, down, up, down in a very small range. So this is not very significant and is not useful for us to using Fibonacci. Okay, so now let's take a look at what is called significant swings. Okay, so it is just the opposite way of insignificant swing, which means there are significant move up and move down. You can see this graph as an example. There are significant move up, then move down in a lot of, then move up again, then down again. Okay, so which means the peak, okay, means the highest point and the lowest point. It's very obvious, okay? Means very easy to identify and very easy to see it. And make sure it's in a very clear market movement. You see, down is down is all the way down, then up is all the way up. It's not like the price is up, down, and down, and down. This one considered in unclear market movement. Okay, take a look at this as an example. So you see here, so you see this peak and this peak is all significant highs, okay, swing highs. And you see here is considered significant swing lows, okay. So we should know like this significant swing and significant swing high and swing low is good enough for us to identify it in a very clear market structure. Also, it's very easy for us to draw up all the Fibonacci retracement. Okay, so now let's take a look at what do I mean by follow the market structure, okay? So here is an example of how to draw a Fibonacci trend lines, okay? So your Fibonacci trend line must be follow the market or the price structure clearly. You see, in this case, there is a zip chart market structure, okay? So it's not in a straight line. So the retracement down here cuts through the market structure. You see here? Let me figure out how can I. Okay, you see this part here. Sorry, let me. How to clear the thing? No, I use this one right now. Oh, okay. Sorry. So you can see the retracement draw here. Okay, it has cut through. I still like this. Okay, you can see the retracement here is cut through the market structure. Okay, which means making the Fibonacci retracement less effective. Okay, so take a look. So here is the Fibonacci retracement should not cut through too large area of the market structure. Also, the Fibonacci trend line must follow the market structure as just now I mentioned it. And lastly, the Fibonacci retracement should not deviate too much from the price movement, which means if the price movement is going up, you cannot be a huge going down. So let's take a look at what meaning by follow the market structure. Okay, so follow a market structure means there is a clear downtrend movement, okay? And the Fibonacci retracement trend line follow the price movement. And lastly, we tend to work better on higher time frame. For example, it's working better on the H4 or H1 or day 1 time frame rather than like 15-minute chart. So let's take a look at this one. Okay. Wait. Sorry. Okay, let's take a look at this one. You see, we draw the Fibonacci from the highest point to the lowest point. As you can see in this example, the price is follow good enough to the market, to the price movement. So there is a clear downtrend movement. Let's take a look at this. Okay, so what meaning by clear market structure? As you can see, there is a very clear swing low and very clear swing high. You see here, swing high, swing high, swing low. Okay, so all this point is very significant and for me, it's very easy to identify it. It consider a very clear market structure. So what's meaning by unclear market structure? As you can see, just now I mentioned the price going down, up, down, up, down, up, down. Okay, so this one is very hard for me to identify actually which point is considered a significant swing high or significant swing low. Okay, besides Fibonacci retracement, we have different kind of Fibonacci retracement level. So every time we are using the Fibonacci tool to draw it on our graph, so you can see the number vary from 0 to 100. We are saying is Fibonacci retracement level. Okay, so the negative number we are saying Fibonacci expansion. And for the number more than 100, we are considering Fibonacci extension. Okay, so now I will just demo a very simple way to draw Fibonacci retracement. Let me open my trading view. This screen is shared. Oh, I need to pull out to here. Okay. Okay, so is there anyone looking for any carousel pair that I can draw for you? Or like if there is no one, so I will just using my own graph. I will just randomly choose a one. Is there anyone here? Okay, so if no one answer, I will just Aussie USD. Okay, let's take a look at Aussie USD. Actually, this is the currency that I want to draw it. Okay, this is the Aussie USD that I have just analyzed today. Okay, as you can see, the current price is a price about 0.69. So I already found the first support and first resistance, which is the first resistance is considered the recent swing high, and first support is the recent swing low. But I don't think my price will go up or like go down to the price today, okay, or like in a shorter time frame. So what I like to do is like I will identify the significant high here, which is at this place. Significant swing low and significant swing high here. Okay, so what I do is I will just draw, let me remove this thing first. Okay, so what I do here, I will just use this one, Fibonacci retracement from low to high, okay? I like to show all Fibonacci first. Then I see, okay, you can see the price actually is here. Is at exactly the level 61.8, which is a very significant in Fibonacci retracement. So by this line, I identify here is as my intermediate support, okay? So it's somewhere here. So I was hoping once the price will pass through the 61.8% Fibonacci retracement, it will go up. If not, the price will go down. So same as this one, okay, how I'm going to find the first support? First support is the recent swing low, but I need to add more confluence to my first support. How I'm going to looking for is a valid or like is a very key support area. So I draw it, I identify the swing low I identify the swing low and identify the swing high. Okay, so I use Fibonacci to draw it from low to high. Okay, let me hide this one first. Oops. Okay, and now it's more clear. As you can see, there is 15% Fibonacci retracement, which is almost in line with my first support. Okay, so here you can see this level is very significant and very key when we're doing analysis. And once the price is trying to break through this level, it will go down. Otherwise, this support is very strong enough that price are likely to able to break through. So this is how I'm using Fibonacci to identify all the key support level and how I identify the price will move. Okay, so now I may pass to my colleague Yongjing to share with you more on the Fibonacci projection and expansion. Thank you.
Hey guys, hey, thank you, Sarah, for that. So I'll just continue the other part of this webinar, so it might get a little bit more technical. Okay, so Vinicius, Sylvia, and Techno Camon X Pro actually asked for Aussie dollar and USD JPY. Well, later on when we finish this webinar, if we have extra time, definitely we will go through we can look at some live charts, give some of my thoughts. Okay, let us continue. So the next part of the webinar, okay, we're going to show you how to do extensions and expansions. So for this slide, I know it might possibly confuse you guys, so I'll just jump into the charts. So how to use a Fibonacci extension and expansion. So just now, Sarah has already mentioned the expansion line is actually a negative 27.2% and negative 61.8%. While the extension is the positive 127.2% and 161.8%. So let us see how it works. So maybe looking at the 1 minute chart. Okay, there's a line here. I was thinking, what was it on the thing? It was a Zoom thing. So let me clear it out. Clear all drawings. Okay, just having a quick look at it. Let's take a look. Okay, so if you actually draw a Fibonacci line, let me find a better setup. Okay, right here. Draw Fibonacci line from the top to the bottom. Let's see where price could possibly head towards. So you actually notice that price went up towards so we'll be looking at extensions first, 127 and 161.8%. So notice that price went up and headed towards 127.2% and then the 161.8% before it rejected back downwards. So just by using extensions, you can actually use it as a form of take profit area. And use it to take profit once price hit 161.8%. You can just close out your trade, or hit 127.2%. You can close out your trade just in case price reflects back down, just like in this scenario right here. Okay, let us move on. Expansions. I'll show one more example by expansions so you guys can see. So if you notice that if I draw a line down, so I'm drawing from the top to the bottom right here, because price went up and retraced back up before heading down. So if you actually noticed, price tapped very, very nicely in the 50% Fibonacci line. 50% right here, tapped right in very, very nicely, reflected back down. Where did it go to? It went towards the negative 27.2% area. So we have negative 27.2 and negative 61.8%. So this could be your potential take profit target if you are looking for short. So let's say you shorted around here, stop loss above, can aim for negative 27.2%. So notice the moment price taps into that area, it reflects off, bounces back up. So always you can actually use 27.2%, negative 27.2%, and negative 61.8% as your take profit target. So you are just kind of forecasting where price might possibly head towards. Okay. Next, let's take a look at this slide. What do we have next? So how to use the projection tool just now. I showed you guys already. I mean, haven't showed you guys, my bad. This projection. Okay. How will a projection work? So we are only going to be focusing on the 61.8%, 78.6% projection. So just a tip on it. So on the MT4, the Fibonacci projection tool is the Fibonacci expansion. And on the trading view, it is the Fibonacci extension tool. So ultimately, unlike the other three methods we have gone through in our previous webinars, this method requires 3 points: the starting, the middle, and the ending points. So we use namely the 61.8%, 78.6%, and 100% feed projections for this. You want to make sure you look out for flash zigzag shapes in this case. So notice it's like the Harry Potter, the zigzag right there. Harry Potter zigzag. Okay, my bad. Let me clear it out. Might have messed up this slide. Harry Potter zigzag pattern. Let's look at a couple examples of this. So looking right here, you notice that from the starting point, the top, draw towards the bottom and to the end. You notice that the projection lines showed the 100% and then price went back down, tapped into the 100% projection line before it rejected towards the upside. So let us just take a look at some examples on trading view. Okay, Fibonacci projection, where is it located? It's located right here. So 1, 2, 3, on the top left hand of my trading view chart. You guys take a closer look. If you are on the phone, please scrutinize your eyes. Take a good look. So it's called the trend-based fib extension. My mouse cursor is over it right now. So you can click on it. Trend-based fib projection. Let me find one nice example. So probably same thing like from here. You can draw it from the starting point to the middle point to the end point. So draw it out. You notice price taps into the 78.6% area and the 61.8% area. But in this specific scenario, once price tapped into the 78.6% area, it actually bounced towards the upside. And ultimately, price also continued moving down towards the 100% Fibonacci projection line. I find more examples for you guys to use. Okay, find another one. Okay, so like this, in this, okay, maybe this is, because this is likely a news event, so it's not the best example. Okay, let me find one. Okay, maybe here, this is quite a nice one. So notice there's a starting point, an end point, and a retracement point. So let's say you already started a short here. You started a short somewhere here, you wanted your stop loss over here, but you do not know where to take profit. How can you use this Fibonacci projection line? So draw from the starting point, from the top to the middle, and then to the end point. You can ideally aim towards the 78.6% or even the 100% retracement level. So looking at this area, the trade would likely hit a 1 to 2.82 risk to reward ratio before it actually did a minor bounce towards the upside. So let us find another setup You will find an inverse setup. Inverse, what do I mean by inverse? It's like a reverse Nike tick. So, looking right here, we will be going towards the starting point, towards the middle points, and towards the end points. So we can draw from the bottom to the middle towards the end. So you'll notice that once price went up, tapped into the 100% fib level, it actually rejected back down immediately. So you can actually use the 100% Fibonacci projection line as your take profit target. Just close it out there if you want to play it safe. You know, you are not risking it. You're not risking that price can continue moving bullish, because price first rejected back down and then continued to move back up. What if price just continued moving bearish? It would likely hit your stop loss. Let me find another inverse projection line. Okay. Let me find it. Still looking for it. Okay, I should find somewhere in the areas where there are long positions that are taken. Okay, so likely this is a good setup. So you're drawing from the bottom towards the middle towards the end points. So we'll be drawing from the bottom. The starting point, I mean, wait, this is the wrong tool, sorry. So we click on it from the starting point to the middle points and towards the end points. What do we notice? Price taps into from bottom to top, and then it frolicked around before it tapped into the 100% Fibonacci projection area. That should be your final take profit target before price started to frolic around and rejected back down. So you can use this as your take profit target, the 100% Fibonacci line. I'll do a few more examples, maybe 2 more examples, so you guys can understand what I'm actually talking about more in depth. So looking right here, another one. From the starting to the middle to the end point. So draw from the bottom to the top and to the bottom. So you notice that price tapped into the 100% fib level as usual before it started to reject and then ultimately push towards the downside. So yeah, any questions so far, feel free to let me know. So any questions, just let me know. We have about 20 minutes left. Ask me any questions. Please do not wait until the end of the webinar before you ask more questions. Okay. Next, let me find a good one, another setup. All this is when we know the move of the market. Definitely, if you have a bullish bias, let me find something like this. So let's say you have a bearish bias. You are thinking you want to short. There's some kind of sell that you're looking at. You're trying to sell towards the downside, something like that in such a situation. So we have a trend line, some kind of moving average that is telling you that price is moving down. So with a bullish market structure, you can actually draw. With a bearish market structure, my bad. So you can draw it from the top to the middle to the end point. So somewhere when the retracement goes back up, you're looking for some kind of structural break. So let's say you decided to short somewhere down here, stop loss above, you do not know where to take profit. You can use the Fibonacci projection from the top to the middle to the end points. So notice that you can actually use the 100% Fibonacci line as your final take profit target. Okay, what time frame can you use the fib? You can use it on any time frame, even on the 1 minute time frame, 5 minute time frame, or even the 30-second time frame. So yeah, any time frame works, but definitely, of course, if you are using 15 minutes, it works even stronger. So it's even stronger on the M15 chart. Okay, let me take a look. Let's say if you draw the fib from the top to the middle to the end, bearish bias. So drawing a fib, top, middle, end. So notice that price actually tapped into the 78.6 level instead of the 100%, just because you are on the larger time frame. So as the larger the time frame you go, 15 minutes, 30 minutes, 1 hour, all this starts to be more sensitive. Even this 61.8, 78.6 starts to be more and more sensitive as you go higher and higher up the time frame. So price went back down, retrace, tapped into it before it bounced right up. Find one more projection, because it's a very, very new tool. Not many people are using it. In fact, 99% of people that I've met and talked to, they do not use Fibonacci projection. So it's something very, very new. It's a new tool. So let's say right here in this specific market scenario, it's a very, very obvious bullish market. So we have 1 tap, 2 taps, 3 taps, 4 taps, and 5 taps, and 6 taps. So this is a very, very confirmation that this is a strong trend line. Price is in a very, very obvious bullish market. 15-minute chart. So next you can draw from the starting point to the middle point towards the end point. So you can draw the Fibonacci projection line from the starting point to the middle point. Is my bad, wrong tool. Starting point towards the middle point towards the end point. So notice that price came very, very closely within the 78.6% Fibonacci area before it rejected strongly back down. So price actually came pretty close towards the 100% Fibonacci level, but it did not actually tap into that. So just do take note, the higher time frame you go into, the Fibonacci projection lines start to get more and more sensitive. So if you are on the 1 minute, definitely I would try to aim for the 100% Fibonacci projection line as my potential take profit target. So looking right here also, drawing from the top to the bottom and to the end. So starting points, middle points towards the end points. You notice that price actually tapped nicely within the 78.6% level and then reflected right back up. So let's see the current price, the market price. We can likely forecast where price might head to. Okay, I don't think there's any setups yet, so maybe I move on to 1 minute. Likely we can see something. So maybe just because price moved from the top to the middle to the end points, we want to see whether price has reached its final, so-called final destination. So price has already tapped into the 100% Fibonacci projection line. So it's right now it's in a consolidation. Final target has been hit. So Vinicius Sylvia asks, so to put on a fib, we need to use all the candle and not only the most significant part. Yes, you are aiming for the most significant part. If you look at 1 hour, another example on the 1 hour time frame. Let me find a good example. So we have a significant swing high right there and a significant swing low. So when a big drop like this happens, we always expect some sort of retracement towards the upside. So when price has reached its retracement, you can start to draw your Fibonacci projection area. So drawing from your top to the middle and towards the end. So I'll draw it out. Top, middle, and the end. So notice that price went up very, very nicely, retraced back up before it went towards the 78.6% projection line. That's correct. Do not just use the body. You always must use the wick. Okay, always use the wick and not the body. Okay. Any more questions? Jude, Aguabo, Kat Kasmi, Samuel Julian, Vinicius Sylvia, Wisdom Ik Yangwa. Any more questions? Let me know. I'll try my best to answer you to the best of my abilities. Okay. So let us move back towards the PowerPoint slide. Okay, so please screenshot this down before we continue. Back, I had some technical issues with the mic. Okay, just now I already showed you guys the inverse Fibonacci projection. Okay, next, I already showed you guys how it bounces off, starting to the middle to the ending. Price hit the 78.6% projection before it bounced right back up. Okay, noted by this slide. Okay, Jude Aguabo, do they have this tool on Smart Money, on Smart Trader? I don't think I've heard about Smart Trader. Let me take a look. What's Smart Trader? Okay, I don't think I've used it before. You can actually try to search it up. So I'm only use TradingView and MetaTrader 4 for my trades. So the 100% Fibonacci line is one of the most powerful Fibonacci extensions area. So notice when price taps into that area, it rejects off almost immediately. Okay, please screenshot this down before I continue. Yeah, that's actually a very, very good question. I've really never heard about the software called Smart Trader before. Maybe I might look up on it after this webinar. So yeah, as I mentioned earlier on, if you want to contact me outside of this webinar, you want to ask me any questions outside of this webinar, feel free to visit my Linktree. So my LinkedIn, my Instagram is all there. Please feel free to follow me. Okay, next. Invalid Fibonacci retracement. So when does a Fib retracement become invalid? Okay, while I'm explaining, please screenshot this down. So one of the most common scenarios of this is when price makes a lower low. So assuming you are drawing a Fibonacci retracement from the top to the bottom, like in the picture, if there are bars on the right that break your ending point, let me find it, right here, breaks your ending point, you cannot use these points as your retracement. So price has broken the 0% level and has made a lower low. Always remember to pick the lowest point with nothing on the right of the ending point. So you should be drawing from the starting point towards the ending point right here. Because this was the lower low. Always. Okay. Combining Fib retracements. So right now we want to add confluence to our trades. So the trick is to find multiple Fibonacci retracement levels lining up together, so you can increase the probability of a bunch of Fibonacci retracement levels working versus a single Fibonacci retracement level. So that is the definition of Fibonacci confluence. So you notice just by using the normal Fibonacci extension line, 161.8% Fibonacci extension, together with the negative 27.2% Fibonacci expansion, together with the 78.6% Fibonacci projection line, all in one nice little area. And then price bounce off that Fibonacci confluence area towards the upside. That is what we call a Nike tick. So that is one of the best trading strategies out there at the moment. So okay, Vinicius Silvia asks, when using retracements, what percentage should we look? So generally, let me type out in the chat, because I'm sure I'm talking a bit too fast. So we generally use 127.2%, 161.8%, negative 27.2%, and negative 61.8%. This is for Fibonacci line. So for Fibonacci projection, it should be 78.6%. Wait, give me a moment. 61.8%, 78.6%, and the 100%. That's for Fibonacci projection. Okay, so yeah, just copy the text that I've just sent, and then you can actually customize it on your trading view. Okay, next. Just now I already showed you guys this just a larger picture. So 3 different Fib levels there, negative 27%, 161.8%, 78.6% projection, and price bounced off very, very nicely. Okay, next. Fibonacci extension. So in this example, we have two Fib methods. We have an inverted Nike tick. So from the top to the bottom and to the middle. So you can see it's a very, very obvious Nike tick. Okay. So with price reacting off the 127.2% and the right here, I'm circling it multiple times. 127.2% Fibonacci extension line and the 61.8% Fibonacci projection line. So you take note of the flash shape, then we can see price bouncing. Let me get it out. Bouncing right back up. So I'm just showing a few examples. So this is another example. So we have the 100% Fibonacci projection line together with the 127.2% Fibonacci extension. So this area coincides very, very nicely in this tiny, tight little box area. Price steps into that area and then it rejected strongly towards the downside. Why? Because it's a Fibonacci confluence. Please screenshot this down before we continue. So this is actually a very good example. Okay, next, let us continue. Combining Fibonacci methods for the fourth example. So in this example, the 61.8%, so it's not that clear. Take note of this yellow dotted line. So that's the 61.8% Fibonacci retracement that is in line with the 100% Fibonacci projection to give us a strong confluence area highlighted by the purple square. So that's where price has bounced off, tapped and bounced off. Okay, next, you notice that I'm looking at the negative 27.2% Fibonacci expansion line together with the 100% Fibonacci projection line and the 127.2% Fibonacci extension line. So we have a nice little box area right here. Price steps into that and it actually reversed towards the upside. So that's a very, very strong confluence area. So please screenshot this down before we continue. So for Fibonacci retracement line, we only be drawing from the top to the bottom. Okay. Please screenshot this down. Okay, let us continue. Okay, next. So in this example, we have a swing low support. Let me get this. So there's a swing low support right here denoted by the green line. So in one long-term 100% Fibonacci projection in line with another short-term 61.8% right here. 61.8% and 100%. So we have a nice little area right there. And then it actually made a strong confluence area. Price then tapped in and then bounced right off. So please practice your Fibonacci extension, Fibonacci expansions, and your Fibonacci projection areas so you can bring your trading to the next level. Okay, I think trade management, we'll leave that to another day. So that's another topic that we'll be going through in the near future. So any more questions, feel free to let me know before I end this webinar. So I'll give you guys another 30 seconds or so. So just to let you guys know, I'll be very, very cautious about trading today just because the FOMC member William, FOMC member Barr will be speaking later. So it's actually a very, very volatile news event that is happening in about 3 hours and 15 minutes time. So later on, in another roughly 8 hours, we also have the FOMC member Waller speaking. So expect, for me, it will be through the night. So I expect much volatility happening in the markets. So I'll be waiting until tomorrow morning, after the Asian session, and hopefully find a trade during the London session tomorrow. So for now, I'm staying clear of the market. So I'm actually risk off sentiments. Okay, so yeah, I would like to thank you guys for joining me today. Appreciate you guys for staying from the start to the end of the webinar together with Sarah. So thank you, Jude Aguabo. Thank you, Kat Kasmi. Thank you, Samuel Julian. Thank you, Vinicius Silva. Thank you, Wisdom Ik Yangwa. Hey, no problem, Vinicius Silva. No problem at all. No problem, Samuel Julian. Hope to see you guys soon again. Stay safe trading, especially tonight. Hey, no problem, Jude Aguabo. You said thanks a million for the sauce. No problem. I'll be glad to share my secret sauce with y'all. Okay, bye guys. Take care. I'll be leaving now.